Hello, today is April 24th, a Friday. It is 1:36. This is your weekend report. Today's title is The Chop Zone, a battle between technicals and fundamentals. We've recently been trading in a pretty decent sized range here, and it truthfully is a battle. It's been based on headlines going up or down. It has not been a horrible price action. We're going to dig into the charts and go from there. Okay, so first things first, here is a quick look. Again, it is 137. I'm going to update charts so you can see the performance. There we go. So we're actually near the highs of the days. The indexes are mixed, but you're seeing risk on, for the most part, doing the best still after an ugly day yesterday. Well, I shouldn't even say it was ugly. It was more of a lost many of the gains that it had intraday. So we're just testing up and down the ranges right now. So technology, consumer discretionary. This is a risk on area that is struggling. This area had done well pretty recent, but a lot of risk off areas in general not doing so well today. So kind of interesting. You're seeing, many of the technology areas, large cap companies that have done extremely well. In fact, many of these names are positive, even above from where we started before the dip. So we're doing quite well in many areas, but I do personally believe that many of these areas are very close to being overbought, if not already overbought. The question that I continuously ask myself is, can value hold us up? Meaning, can some of the areas that got killed hold us up? And that's what I think needs to happen, more of a broad-based rally rather than just a few sectors in biotech, technology, and healthcare. That's what I would like to see. We'll see if we get it. If not, it does concern me that many of these companies are so elevated at this point. So in reality, the price action from a technical standpoint has been pretty strong, pretty impressive, pretty resilient. The question is from this point is, again, are the value areas going to play catch up? While many of the tech areas, will they take a break, consolidate? Will that give them enough time for the entire market to rally? So that's kind of where we stand at this point. Just being a realist there in our thoughts. Again, we try to give you our opinion, but really our opinion doesn't affect oftentimes the way we actually trade. We're basing our trades based on price action. We are very cautious here based off the moves that we've seen in technology. So we're going to hit some of the main charts and we will go from here. Here is, first of all, the S&P 500, more of a short term. It's a monthly perspective, basically. Here's the channel that we've been following. We broke out of this. However, again, this wasn't necessarily a kill sign. I'm like, oh shoot, that's unfortunate. Many would have just sold here and not really looked at the big picture here and say, hey, we're still holding key levels. I mean, this was a key level that I have indicated several times. This is why I provide the support resistance levels. It held the 27.27 right here, or 27.21, and rebounded. So here's kind of the range we're looking at right here between 28.40 and 27.27. So it's kind of a wide range. It's a frustrating range, especially when you have this like island here. It's like, man, which way are we going to go? It leads to a lot of indecision in the market. And so that's why I titled today's session, essentially, it's a battle between fundamentals and technicals. Fundamentals are not pretty. But are these companies going to get a pass? There are some companies that will do well in this environment. The problem is that at this point, are they overcrowded or will they need some consolidation? And what happens if they do fall? That's what we're going to find out pretty quickly with big earnings coming up next week. So next chart, the midterm perspective. It's a similar chart realistically, just on a daily basis. And it's good to have different perspectives, different time frames to just kind of take a step back and just look at it to say, okay, here's the range, or excuse me, here's the channel. It followed. Oh, shoot, it broke. But really, it's just been sideways movement, and that's not bad price action. So we have to be real about that and understand that it's not horrible. So, I mean, again, we are basically near the highs of the day, and it's not bad price action. Headed into a very, very, very volatile week that will probably occur next week. So keep an open mind. That's the biggest thing, and what we're doing right now is to make sure your emotions are in check. Here's more of the midterm, long-term perspective. Again, we've basically been saying, from a more long-term perspective, guys, this is the range we have been trading for a long time. We are back in that range. Here we are right near 28.12. We said the 50% retracement, which is a little more difficult to see, but 50% retracement is still above that, the 27.92, which all that means is from the top to bottom, the zero retracement to 50%, that's actually an important level to hold. And it has relatively decent so far. It's chopping right in this range. It's been an interesting week, but I would not be surprised to see us chop in this range for a while. I mean, it's going to take a while for some of these beat down names to really get a boost. I mean, there is fundamentally some serious damage out there. We have to be real about that. But also understand, we reiterate this consistently, market is forward pricing by 6 to 8 months. So while you're seeing all this chaos, unemployment being horrible, some of the largest losses in employment since the Great Depression, I mean, you're going to see all the negative news out there, and it's something to take into consideration. However, usually when you see those, the market actually does well. It might not make sense to you. That usually means, like, can it really get much worse? The answer, it probably will get a little worse, but people are continuously buying it because they understand that, hey, this is once every 15 to 20 years opportunity when it drops this low, and so they don't want to miss it. So there's a little bit of FOMO, fear of missing out, going on as well. So there's kind of midterm, short-term, and long-term perspective. Gold. We're going to try to zoom through this a little faster. I spent a little bit too much time in the past. So gold, this continually is of interest to me. Consistently above the RSI, relative strength index, above 50. It's down today, but the market is doing well today. How could this perform? Will this continually do well during dips? Obviously, it got hit originally, but now it's showing quite a bit of strength. So something we're watching there, small cap, more of a index to kind of show you. Again, we showed this to you weeks ago. It continuously hits this wall and bounces off. It's frustrating. But small companies will likely struggle in this arena. It's just the reality. There's a reason why there's so much stimulus going to the small companies. So we will be watching that. The NASDAQ 100, the QQQ, continuously doing okay. Where are we at now? 212, what is the 10-day? So just holding the 10-day moving average, which is not bad price action. We showed you a key level. Can it break through here? It did. It's holding. It's still on the verge, but you got to be even keeled at this point. It's really a zone where it's not smart to get bearish, and it's not too smart to get overly bullish. You could get really killed in both directions. So keep an open mind both ways at this point. I wouldn't take a ton of risk. This is good consolidation in the TLT, whether you like it or not. Again, the price action is good. RSI above 50. This is all good stuff. Continuously watching that one. More breadth related. So obviously from the peak, this is volatility or fear. Mid-March was the peak. We're down now below 40, which is a good thing. This range we kind of keep testing. This week we did have a nice little boost into the 50s. But we are going in the right direction. But again, this will continually go down, and the market could go down as well. So don't just assume because fear goes down that the index will go up, because we already had a huge rally. So that's where we are being a little cautious. We love the move, but we're also going to be a realist. And in most given situations, when you see, a 20 20 to 30% increase across indexes, which again, we got oversold. Now we're, in my opinion, a little bit overbought, so I'm going to reduce positions. So that's kind of where we stand there. Another breadth indicator where I would like to see more strength, this is a comparison between banks, the KBW, and the S&P 500. It's trying to improve. I want to see banks do a little better, more of a broad-based rally. When you see this comparison or this correlation this low, you hope you see banks recover. I mean, that's a big difference, a big underperformance in banks. Hopefully this, it's a high risk trade at this point, but it's something we are watching. And finally, the New York Stock Exchange New Lows. So again, the New York Stock Exchange basically is the culmination of most traded stocks. And in general, mid-March was the peak. Large number, 2714. That's crazy. And now we're getting more to realistic numbers. Okay, so the number of new lows is decreasing, which is a good sign. So things have improved, but have we overshot? I think we overshot to the downside. Now a little bit to the upside, to be honest. So I think we need to maybe test. I'll actually show you in the chart. I think we need to retest. It would not surprise me to retest, one second, the 2650 level right around in here. I would not be surprised. I've been saying that for quite some time. Eventually it's going to happen. Companies might get a pass this quarter though, so don't become too bearish. But wanted to show you a wide spectrum of charts. Remain open-minded here. Sure, there is a lot of bad news out there, but again, the market is not pricing what it sees today. When we saw the news on Gilead that basically said the drug was ineffective or less effective, the pill was less effective, the market yesterday saw a quick drop. However, it is not dropping off the table, and it's staying within these important ranges and doing okay. Last night we tested very low near the 2650, or excuse me, the 2760 level right around here overnight, and rebounded. So right now on any dips, the well-known companies with good balance sheets are doing well. I might regret saying this, but it's very interesting. But I do believe some of the overbought areas in the reputable companies with the good balance sheets are a little overcrowded. So the question is will value play catch up? The areas that have been beat down play catch up, or will the market go down together? That's going to be a tough one. That's where I'm a little cautious here. Very well could see 2840. Very well could see the 2879 level again. That is very possible. That could happen in a day. But my concern is more, since we're not seeing the consolidation, do we need to see a little lower testing to bring more assets onto or more interest into the market? Because there's still a lot of money on the sidelines right now, and I think a lower test would bring more in. So again, don't freak out when the market goes down. It's probably going to happen. View it as an opportunity, and that's why we have so much in cash. So have we timed it perfectly? No. We did a very good job up here. I got out a little bit early. I got out right around this level before and missed out on some. We still have some invested, but missed out on a decent little run here. It went a little bit beyond what I thought it would. So just got to be cautious here. We will keep you posted. The energy sector, I will show you this real quick and we'll move on. The energy sector did test is the lows of the 1990s right here, and we're struggling to get above. It's had a nice rally this week, but it's struggling to get above 18, which is huge resistance above for crude. Energy companies, I think you got to be really careful. Most of those companies struggle if the price of oil is not near the 30s. I question the risk reward, whether I want to play in those names or not after this recent rally. Had a nice pop, get out. That's kind of my thought there. And the GDX, which is the gold miners. Oh, it didn't save my line, but it's essentially right here. it did have a breakout, and it wouldn't surprise me to see this continue even higher after maybe a retest. Many analysts want to see this go all the way to 50. So, and it's very possible that it might. So, we are watching a lot of things right now. A little cautious because a lot of the areas that you want to be in are pretty pricey at this point. So, we are watching closely. Let us know if you have questions. If you have concerns, you got to reach out to me. I can't read where your emotional state is. So make sure you reach out to us if you have concerns or questions. That's pretty much the end of our video today. Let us know if you have questions, and we will go from there. Have a great rest of the week. Get outside if you can. We're here for you. Thanks again. Bye.